Hi, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. It is July 22nd. Let's take a look at what is going on. Hope you had a fantastic weekend. All right. Quick reminder, everything we do here is for educational purposes only. It is not intended as investment advice. So what to watch this week? Yesterday, we had nothing. So today, existing home sales, our flash services PMI and manufacturing PMI should not be market movers. Nothing on Wednesday, really. New home sales, that's not going to move the market. But let me tell you where it starts to get interesting on Thursday. So we've got the GDP number coming out, supposed to be at 1.9% for the second quarter. The first quarter is only 1.4%. That's pretty good. Then initial jobless claims, which last week came in at 243,000. I think anything 240 or above, the Fed would be going, we finally have put a crack in the labor market. I don't suspect anything else is going to be of material value in terms of pushing the market one way or the other. Friday is a huge day. It's an inflation day. So we have personal income, supposed to have gone up 0.4%. Personal spending. Then we get into PCE, personal consumption expenditures, and then the year-over-year number. And then we get the core number. So right now we're expecting it to come in around 2.5%. We're getting pretty close to that 2% target that the Fed's got. And Chairman Powell said they're not going to wait until we're at 2% to cut rates, and they're not. This was last week's heat map. So again, we had some of that rotation out of the tech names into the more boring stocks, the more value-oriented stocks, staples, industrials, materials, healthcare. But over the last year, you know what's been moving. NVIDIA, 168%. Thank you very much. Microsoft, 27%. Broadcom, 80%. Apple up 17%. Could be worse. It was down for a long time. JP Morgan, 35%. Alphabet, 53%. Meta, 61%. Amazon, 41%. Walmart's been doing just great, 35%. Costco up, Lilly up 87%. So been a lot of money made. The big winners this week are kind of newcomers. Not that they're new companies, but we haven't seen them in the big winners column for the week. Warner Brothers Discovery. Now, Horton makes sense. We're anticipating, they're a home builder. We're anticipating a rate cut. That'll be good for home builders. United Health, UNH, had a good week. We've got some regional banks, Huntington Bank Share, Regions Bank, Discover One Financial Services, CBOE, where they trade options. That has been moving higher. So little changing of the guards. Speaking of options, so there's a index that does a comparative between call options and bull options. Look at that. Call options are ripping. Call options are what people buy when they're expecting markets to go higher. So a lot of optimism out there. Russell 2000 has finally made their move between July 9th and 16th, was up 12%. That's a hell of a move. By the way, the Russell 2000 is supposed to lead the market in election years. And you'll also notice the earnings growth rate on small caps beginning the fourth quarter of this year is supposed to exceed almost across the board that of large cap stocks. That is a definite reversal. M2 is on the rise. This is money supply. So when money supply is prevalent, there's money available to put into stocks, which cause stock prices to go higher. Market's been on cruise control. We had 351 consecutive days without a 2% pullback in the market. AI earnings are starting to roll over. Isn't that interesting? Maybe they've bottomed out. I don't know. But they've definitely been headed south. So we've started to see some pullback. The shorts have gotten it wrong this year. So the most shorted stocks in the Russell 3000 are up year to date 15.7%. So those are bets that the stock was going to fall, taken by hedge funds and professional traders. On the other hand, the least shorted stocks only went up 10.7%. So the point is the stocks that the pros thought were going down actually went up. And some of you pay these people money to get their advice. Stop it. Money is pouring into equities, as it should be. The market's moving higher, an election coming up, an interest rate cut around the corner, earnings are growing. Why not? Market sentiment has gotten very bullish. So on average, 37.5% of respondents say they're bullish in the market. Those are the historical averages. Right now, we're at 52.7. Continuous job claims, those have been skyrocketing. The Fed would never say that they want to see higher unemployment, but they want to see inflation come down. And they know to get there, higher unemployment is part of the deal. Latest probabilities, there is now a 93.6% chance of a rate cut in September. Well, that's a quarter point. There's another 2.5% chance that we get a 50 basis point cut. That's not going to happen. This is where we're going to be, right here. We now have baked in 3 rate cuts for this year. I say we're going to get 2. And then earnings this week, a lot of big names. Tomorrow we got Coca-Cola, Tesla, Alphabet, Visa. These are all potential market movers. Wednesday, AT&T, Ford, IBM, Waste Management. Thursday, we've got AbbVie. Probably none of the rest of these are going to move the market. And then on Friday, 3M, probably the biggest of the companies. So we keep track of our track record for our trade ideas of the week that my trading partner and I use. So for this year, we've closed 74 trades. The average return per trade has been 18.9%. Average holding period, 19.2 days. So basically, we're averaging on these trade ideas about 1% per day. If we do half that well the second half of the year, I'll be delighted. Let's take a look at the charts. All right. SPX, which is the S&P 500, I could have used SPY. They'd have looked just the same. We've spent, most of our time above that 50-day moving average, and the markets were starting to roll over, but now they're beginning to recover. So hopefully we are on to making yet another new high, but we are definitely bullish, but I would call us cautiously bullish. There's a lot of stuff going on out there right now. Politically, don't get me started on that. And then just the question of this sector rotation that we've seen a couple of times, is that going to be more permanent? We don't know yet. On the Qs, this is the NASDAQ 100 trust. So it was definitely moving back toward this 50-day, but it has bounced. So stay up there. Stay away from that 50-day. I wanted to treat it like an electric fence. And then the IWM. This is the Russell 2000. So it made this huge move, little pullback. And right now it looks like it's in good shape again. All right. There's your market insights, my friends. I will be back with you next week. So until then, be safe, be blessed. Bye for now.